Money day, guys and girls. Welcome back to another episode of Market Mondays. You're here with your host. You're learning with no other than learning with Vel. Now, of course, we're back with another episode of Market Mondays, so it means we have to provide you guys with an update on what's happened throughout last week, what can potentially happen this week, and also giving you guys some education on top of it too. So without no further ado, we are going to get straight into this. If you're new to the channel, welcome. Be sure to click the link in my bio so that you guys can get access to my Telegram channels. I say channels because we've got a channel that can give you guys free education and trades. And I've also got another channel that can help you guys work smarter rather than harder. That's right, automation. AI automation is very important in this day and age right now. It's even more important to be working smarter than harder. You know, the times of us working 4 jobs, just to get by, or 2 to 3 jobs just to kind of have more than the average Joe is unnecessary. You know, the new breed of millionaires are being birthed online. So with the AI that I have available, it can simply do all the hard work for you so that you don't have to think about it, guys. You turn it on, it trades for you. You turn it off, it stops, okay? Just like that. Bada bing, bada boom, okay? All you got to do, click the link in the bio so you guys can see for yourselves what I do, how it works, but most importantly, how it can benefit you. So with no further ado, if you haven't already, slap that like button and the subscribe button. If you haven't, you're playing games, man. You're playing games, yeah? So cool, let's get into this with no further ado. Right, so we're going to start off by looking at the economic calendar. We can see here on Wednesday, we've got the New Zealand interest rate decision. The previous rate was 5.25. The forecast is 4.75. They will most likely reduce the interest rate. All of the central banks are doing this right now to combat inflation. When we look at the crude oil inventories, that is going to take place on Wednesday, as it does every single week. And in actual fact, because of the war and the tensions that's happening right now in the Middle East, the price of oil is going up, so it's most likely that it will continue to go up as they're probably decreasing the supply. Now, we look across, we've got FOMC minutes, which is going to be, of course, Wednesday evening, for me anyway, as well as for you guys. This is UK timing right now, okay? On Thursday, we've got CPI. For the dollar, we've got jobless claims. This is all going to be important information that gets released because the consumer price index right now is also going to be what is forecasted to have been reduced. Okay, 2.5% was the previous month on month. That was the previous percentage, and of course now they expect it to be 2.3%. So we're going to have a look out between Wednesday and Thursday. The market should really warm up. And on Friday, we've got GDP for the pound. We've also got CPI for the German economy. So that's also going to be really important to have a look at. In terms of articles, now, I read a few articles this week. This article here, okay, it says the benchmark 10-year Treasury yield rose 4 basis points to 4.2%, 4.02%. That marks the first time since August that the yield topped 4%. Higher oil prices also weighed as tensions in the Middle East remain high. US crude climbed nearly 2% more, 2% to more than $75 a barrel. If we have a look at the price of oil, we're currently at $76 a barrel and still rising, okay? I'm not in a trade right now, but if we can get a retest, I will be looking to buy from round about here, okay? In fact, I'd push it up a bit higher to here. I'd push it up to look to see if we could buy within this candle. Okay, if we can get a solid retest within this candle, that'd be great. I tend to not really trade on Mondays, but we kind of do already see some type of positive. If this was Tuesday, for example, prices closed above the zone, it's come back down today, I would have looked to have taken this buy, but we've missed out on it, so we can only wait. And ultimately, guys, I see this going up to $81 a barrel, at least 80. So if we can get a retest, great. Maybe we don't. If we don't, I'll be looking at definitely taking a short. The short will be short-lived. Okay, no pun intended. And that's because of, you know, the war that's happening right now. I don't see why commodities or decline in prices, they will only incline. When economies are performing poorly, or when economies are perceived to be uncertain, commodities do very well. Okay, investors are crowdfunding their money into assets that are going to appreciate in value. And of course, oil, gold, silver, these are all things that are going to appreciate. So these are also things that I'll be updating you guys on. Now, of course, it's very important to understand, guys, that war is not good for consumers. Okay, it's not good for the average everyday Joes, but it is good for investors. And the reason being is because it makes the markets more predictable. So, you know, when it comes down to us understanding why we're in the markets, what we're in the markets for, we're in the markets for predictability. We want to see things take place. We want to see things happen that we believe is going to happen, so that when it does, we know how to react. So for US oil, I will be waiting for price to reach above the $78 a barrel. There's liquidity in areas above over here. Okay, we've got liquidity in here as well as here. And of course, even higher, guys. I'm not saying that gold is just gonna go, I'm not saying that oil will only turn around at $82. Oil could keep going. Okay, when we look at oil on a monthly time frame here, okay, the monthly projections, if I'm honest with you, we have been consolidating in this area. We've been in a bit of a range, but we are in a short category, guys. We want prices to go above the 62%, so we can consider taking a short, but we can't ignore the fact that, you know, the fundamental aspects of what's happening in the world is going to have a huge factor on the direction of what oil is going to be taken. So we're going to be waiting to see what happens. Of course, you know, we've just started a new month. We're only 7 days in. It's the second week of October. This is also going to be really important for us to see what happens. So I'm going to be keeping you guys informed and up to date inside of my Telegram channels. It's important for you guys to be in there. If we do get a reaction, okay, I will be looking at price coming towards the downside. Okay, I would like price to come down towards this candle here. I would like price to take out the liquidity here. If you think about it, if people got into a buy, their stop losses would be around here, which would mean that there is people's money here. Stop losses equals liquidity. Liquidity means money, people's stop losses. So there is a huge reason for prices to decline and actually come down and take out this. I'm not saying price has to come down and come to the lower side. I would love it to do so, but at the very least, I would expect price to at least swoop this low, grab the liquidity before pushing up. So we're going to be patient. We're going to see how this plays out. Right now, oil is really pushing. Of course, the markets have opened. Today is the first full day of the market operating, and of course, it's responding to what's been happening over the weekend. You've got the UK getting involved with bombing Yemen. You've got Lebanon. You've got a lot of countries that are now really getting in the mix of things. So it's to be expected that, of course, you know, with these countries, you know, being oil producers or having oil, you know, to say the least, it's to be expected, guys, that the price of oil will definitely go up because of what's happening. Okay. The next thing I'm going to show you guys is the Japanese yen basket. For those of you who are new to my channel, the Japanese yen basket is equivalent to the DXY. It's an index. Okay, with the Japanese yen basket, if this comes down, it means the yen is weaker. If this goes up, it means the yen is stronger. So looking at this chart, looking at what we've seen here, of course, we did have the Japanese yen increase their interest rates for the first time earlier this year. That did send the strength. That did send the direction of this up, which indicated that the yen was really strong. Now, however, of course, you know, what we're seeing here is a nice pullback. We've seen liquidity grabbed, and we could now be coming back down. We could be. I'm not saying it's going to be forever, but the price action on what we can see right now is that lower prices is most likely going to be on the cards. And if that is the case, guys, then that would mean AUD JPY would go up, USD JPY would go up, and Euro JPY. Where is Euro JPY? I don't have it on here for some reason. Let's add it on here quickly. Euro JPY. Okay, here we are. That would also mean Euro JPY would push up as well. So I'm going to be looking at how we can get into some trades with this. Ultimately, I want all of these pairs to come down in order for me to buy it. Just because I think that the Japanese yen will come down doesn't mean that I'm just going to start buying these pairs just because I think something's going to happen. I want to see some confirmations, and once I see that, I'm then of course going to react and provide you guys with these trades inside the Telegram. I provided you guys with this trade here. This trade gave us 1,678 pips. We was in profit for 5 weeks. 5 weeks we was in this type of trade, which was absolutely beautiful. So of course, guys, we want to look at, longer term trading as well as intraday trading. We want to really take what we can get at this point. So yeah, I'll be looking at what price action does, how price closes today, and then tomorrow, of course, we're really going to get into the thick of trading. So make sure, if you guys are not already inside my Telegram channels, to get access into them and to take advantage. Okay. With that being said, we're going to go to the next commodity. I'm going to show you guys gold. Now, gold has been stale for the past week. Okay, we had NFP take place on Friday. Gold didn't really move anywhere. If we look at gold, it hasn't really moved anywhere. Now, I would love for gold to pull back down to $2,600 or $2,529 per ounce. If it doesn't do that, price could just keep pushing up. And to be honest with you, because of what's happening right now in the world, gold pushing up is most likely the probable outcome. If it isn't, or should I say if it doesn't do that, we're going to be ready. We're not going to buy at an all-time high. That would be absolutely crazy. But I do see $3,000 as a target for gold. I really do see it getting there. The time frame as to when, I'm not quite sure. But hey, just this year alone, we've gone, if we start from the start of the year, where are we? February. We've started from $1,990 an ounce all the way up to $2,678 an ounce. So we really have made a lot of ground. If I show you in regards to a percentage, boy, we've gone up just under 35%. So it's been a huge incline. And of course, now what we want to be able to do is see if we can get involved in these trades. I've told you guys before, I'll tell you guys again, silver is the most underappreciated commodity. This is an asset you guys should be buying physical silver. If you go into coininvest.co.uk or coininvest.com, you can purchase physical silver. You can purchase grams, you can purchase ounces, you can purchase literally anything you want, any size, any amount you can purchase. It's a regulated website. You'll have to pay importation taxes depending on where you are in the world. But ultimately, this is going to be your investment portfolio that you start with if you're yet to have one. Okay, purchasing some silver would be amazing. The highest price silver's ever gone to is around $49 an ounce. You can see here, just under the $50 mark, and we're currently at $30. So we're just a little over halfway in terms of the ultimate highest price that silver's ever been. But this also shows you that there is also reasons for prices to continue climbing higher. So silver is something that I don't really trade, but I just have a look at to monitor, because if this goes up, then the price of gold goes up with it too. If this comes down, vice versa, you know exactly what's going to happen. So I'm just looking to see what's happening here. We have been sitting inside of this candle for a few months. We're yet to really break the $33 handle. Once we do break that, of course, it's going to be smooth sailing. I really do believe if we can get a push, if we can get a retest, so what I'm looking for, guys, is something like this: push up, close above, come back down, and that. Okay, if we can get a close above this yellow zone and then a retest back down, I would love to go long on this, and of course provide you guys with this type of trade as well. Nvidia, shout out those who invested into Nvidia. I told you guys to buy this when it was at $90 a share. Now we're currently sitting at $128 a share. So when we look at the growth currently is 43%. If you invested £1,000, you would have made £443 right now. That's what you'd be sitting on, just under half. It's not a bad investment. You have to understand, from an investment perspective, things take time. No investment is just going to make you rich overnight. Okay, and if you're investing for things that you want to make you rich overnight, those things come with an insane amount of risk. Okay, so with no further ado, I'm going to take you guys over to Bitcoin. Bitcoin was a trade that I gave to my VIP community, my paid community. I gave them this buy on Friday. We was able to sit in this. We've had TPs 1, 2, and 3 hit, and prices are still going. Personally, I do think that Bitcoin can potentially take out this high. If it doesn't take the high out, guys, and I at least wanted to fill some of the imbalance. It has filled some of it, but I would like it to keep going. The reactions and the rejections that we've seen right now does further support higher prices with Bitcoin. So we do want to see higher prices. Bitcoin kind of falls into the same category as being a commodity. Okay, Right now, investors are definitely going to be putting their money into assets that's going to appreciate. Bitcoin is one of them. Okay, Bitcoin is one of them. Now, let's look at the dollar. Okay, the US dollar. Last week, I mentioned inside the community I wanted prices to reach 102 into this yellow zone. It's reached there. Now it's pulled back. I would like it to continue pushing higher. If it does do that, then it's going to make it easier for us to line up some shorts with the majors. The first I'm going to be looking at is Euro USD. So if we have a look here, I will be looking for a short, guys, around here. Okay, I'll be looking for a short around here. For those of you who know me, I risk 35 pips maximum when it comes to trading Forex. And I will be shorting it down to the 107 handle. Okay, that is what I would like to be doing. I'd be taking profits when we get to this yellow zone here, but this is a trade that we could potentially be in for a number of days or even a number of weeks. Who knows? Hopefully the quicker the better, but nonetheless, we can't of course rush the markets. Now I'm gonna set an alert at the 1 point. Remove. You've reached the overall limit of 2,000 alerts. That can't be right. Okay, let's remove all inactive alerts. There's no way I've put 2,000 alerts down. That sounds absolutely crazy. Okay, let's do this. All right, cool. Now I'm gonna put here approaching. I'm not even gonna put approach. I'm just gonna put weekly structure. Okay, anytime you see a light blue line on my charts, it represents a weekly structure level. So once it approaches there, I'm going to have a look at what happens, because of course, you know, we could just potentially fill the imbalance here and then push down. So I'm going to see what price action is saying so that we can of course make a decision on if we're going to take this short then or wait for prices to continue pushing higher. When I look at GBP USD, well, GBP USD right now, it looks really ugly. Okay, the rejections show us that prices could come down lower, but the price action doesn't really look too clean, guys. The price action shows you that we're bullish. It shows you that we are pushing higher. We have sat inside of this candle here, this monthly candle. Price has reacted, but hey, we need prices to come down to as low as here. Okay, 128.604. We need prices to come down there in order for us to push up. It may or may not happen. To be honest with you, I don't think it will. But we do have to be optimistic. We have got some weekly imbalance down here, so we're just looking for the continuation of the higher high. Okay, we had the higher high. We could come down here to make a higher low and then push up to make a higher high. That is what I would like to see happening. Whether we see it or not, who knows? With AUD USD, I've been waiting for a buy. The buy is just getting further and further away. But ultimately, guys, now that we're going to be approaching this weekly structure level, I'm also going to be looking at what happens when price approaches there as well, because we may have missed our entry for the optimum entry, which is down here. And if that is the case, guys, then we're going to react when the markets, present us an opportunity. So I'm going to look at what happens when price reaches towards this handle. Ultimately, the most important thing that I could teach any of you who are new to trading is being patient. Being patient pays, okay? I've been persevering through this fucking maze, right? Being patient pays. You have to wait, you have to be patient, and you have to understand that the markets are trying to entice you in. The market's job is to entice you into trade. The only way the markets make money is when they tap your stop loss. So if you're not in the markets, you can't take any unnecessary risk. Trading is about reducing your risk and maximizing your profit. So we don't want to jump into trades that we're not too sure about, that we're and ahhing. We want to jump into trades, ladies and gentlemen, that we feel absolutely confident about. If you've got this far in the video, well done. Be sure to smash the like button and subscribe. You know the vibes, it's lit side. With that being said, we have to make sure, guys, that we're patient. We have to. I have to express this, guys. Being patient pays. Being patient pays. That is the one thing that I want you guys to learn from today's session. Being patient pays. Now, to go into a bit of education, guys, this Fibonacci here is absolutely amazing. Okay, I'm going to show you guys here. You can pause the screen and take my settings. Okay, these settings have never failed me. I've used them for over 7 years. These settings, you will see on any time frame price will respond. Every time I get into a trade from either in between my green zone or at the 88%, the first profit target is -14 to -27. The second profit target is up here, and then the third profit target is up here. Of course, the higher the time frame, the longer this is going to take to play out. But if we go on to, let's say, a 5-minute time frame, for example, and let's say let's use a different pair just because the long position's in the way, okay? But let's just say we start from the very bottom here, right? If we start from here and we fib from low to high. So let's get the fib out. Let's go low to high here. What can you see happening here, guys? You can see, look, price goes up, it comes down 62%. First target here, okay? Then it comes down. Second target here, it comes down. Third target, guys, I've just shown you this on a 5-minute time frame. This can work on absolutely any time frame. I promise you. Use the settings that I've given to you guys and use these areas as take profit targets, and all that will happen is you'll become more patient, but you'll also become more profitable. Okay, you'll become more precise. If price hadn't reached my kill zone area, then I wouldn't be in a trade. But time and time again, we can see prices will reach your areas if you're patient enough and if you're actually paying attention. If you're not paying attention and you're not patient, then you will miss the opportunity. But in this case, we found it. So what we then look at when we have a look at these profit target areas is, what can we see next to these numbers that can merit the reasons for us to take some profit? Well, what I look for is liquidity. So in this area here, we have an equal high and we also have an equal low. Okay, this is a invalid equal low because price has now come down, but nonetheless, it's a previous area of liquidity. Okay, so I use that area. If I look to the left again over here, I can see I have equal lows in here. I got equal high in here. Okay, so again, I've got a reason to understand, right? Here's another equal low. I got reasons to understand that these areas are areas of pockets where money has been created, pockets where people have placed their stop losses. The market's job is to create liquidity and then to grab liquidity. That is the sole intention of the markets, ladies and gentlemen. So because of that, you have to think about it smartly. Don't jump into a trade where you know everyone's jumping into a trade. You need to be getting out of the trade where everyone's jumping in. If you get out of the trade where everyone's jumping in, then you can avoid your stop losses being hit. Don't get me wrong, of course, I'm not saying you're going to be the only person buying a particular currency pair whilst everyone else is waiting. No, but you want to be a part of the minority. If you're a part of the majority, then what happens is you buy round about here. What happens is you buy round about here, and what happens? Price comes down, taps you out of your trade, then it pushes up in the direction you wanted it to go anyway. So you got to be patient, guys. Patience, being patient pays. I've been persevering through this fucking maze. I should release a mixtape. I'm telling you, trading can be the most beautifulest job. It can be the worst job because it's all about what's happening up here. If you haven't got the mindset, if you haven't got the skill set to be patient and to be disciplined, then you can end up just balling out of control and blowing your accounts. Blowing your accounts is not good for business, so always make sure to keep calm and keep collected. I'm going to provide you guys with the rest of the trades, the rest of the updates inside the Telegram, so you need to be inside of there. This has just been another episode of Market Mondays where I provide you guys with an update to what's happening in the world, how I'm looking at charts for the week, and also, of course, a nice valuable asset in terms of how you guys can use a tool, which is the Fibonacci, that can help you guys have better entries. The Fibonacci is used, its sole purpose, its sole design is to help time your entries. Once you know you've had a break of structure, once you know you need a retest, you're waiting for a retest, the Fibonacci helps you understand where you should be looking at. Okay guys, so let me know in the comment sections what you thought about today's video. If today's episode you found it valuable, then share it with a friend, but at the very least guys, smash that like button and subscribe, and I'll see you guys on the next one. Always remember that every day is money day. Peace.